Hey, it's Rav. Welcome to Everyday Investor, the hottest investment show in the world. That's right. I said it. I don't care who knows it. This show is designed to help us all grow our money. The last 17 years to help us grow our money. You see, we take our precious time, we go to work, which is a great thing, a blessing. We get a paycheck in order to eat. We take our time, we go to work, we get paid so that we can provide. But imagine a world where you could have money make you money, so you could take that time and do with what you want, spending it with loved ones, family, friends, engaging in a purpose greater than yourself. That is what Everyday Investor is all about. Remember, whenever you're offered any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the return on investment? Number 2, when do I get that return along with the money that I put in? 3, what is the minimum investment amount needed? And 4, you look them right in their pretty eyes and you ask them, what is the risk, the downside? If they can't answer that, run really fast. So grateful that you're watching. Super excited about this show. We're talking to my friend. Wait for it. We'll be right back. Coming up, we're talking to Andy Tran, and he's going to teach us how we can make money investing in Garden Suite.
And it was really only a matter of time, right? Just the perfect storm of what we're seeing with real estate prices, immigration, the lack of housing that we have.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back. Before we talk to Andy and learn how we can make money with a basement suite, a garden suite, let's go and find out what's happening in the world of stocks with stocks expert Omar Khan. Over to you, Omar.
Thanks, Rav. Omar Khan here, guys, with Data Trading. Weekly market recap. Markets are at an all-time high. The S&P 500, the NASDAQ, and the TSX. Now, why is that? Well, the reason is because ultimately earnings drive stock prices higher or lower. So earnings, the amount of money that companies have been making, have been coming in really, really high. And also the outlook of these companies has been generally positive. So the market keeps running up. That's kind of counterintuitive to what normally happens in summer months. Summer months are kind of choppy. Now, they are at an all-time high. However, August, September, October, not statistically the best time of the year for the market. So we're really going to keep an eye on inflation, which seems to be subsiding now, and to see if this market can keep pushing higher, even though we're going into a rougher time of the year historically. Let's see what happens. Back over to you, Rav. We'll see you guys next week.
Thanks, Omar. Always great to learn from you. Andy, thank you so much for being on the show with me.
Yeah, absolutely. Thanks for having me, Rob.
Yeah, we've never really, kind of hung out, but we have the same circles, whether it's with Charles or with Erwin Zito or, but I've seen you around and I've always wanted you to be on the show. You've been doing a lot. I know you worked on a development and severing land and, multifamily, all that kind of stuff. But, hence the background there behind you, suite additions. I know you niched out into the, basement apartments, if you will, but then something really interesting, what's called a garden suite. I mean, I've never heard it called a garden suite. I know that's the terminology. I've always heard it, kind of laneway housing. But talk a little bit about that specifically, and how did that come to fruition in your portfolio?
Yeah, absolutely, Rob. So it's brand new. Really, this concept has been around for many years in other jurisdictions, not here in Ontario. And it was really only a matter of time, right? Just the perfect storm of what we're seeing with real estate prices, immigration, and just really the lack of housing that we have. And so finally, the government, 2019, passed Bill 108, the More Homes, More Choice Act, which essentially allows people to add in what's known as a detached accessory dwelling unit in their backyards as a third unit. So you can have your main unit, you can have your basement suite, and then you can have this third unit. And, you know, there's many different names for them. Like the official name is detached accessory dwelling unit, but it seems like what most people understand them as is if you say garden suite, that's what makes sense. Some people call them coach houses. Some people call them backyard homes. They're all the same thing. Now, laneway houses are a little different. Structurally, it's the same. Although with a laneway house, you need to have a rear or side laneway directly accessible to that unit. That would make it a laneway house compared to a garden suite.
Okay, so thank you. That's great. So a laneway house, there's got to be a laneway to be able to get to that back dwelling or wherever the dwelling is. But with a garden suite, there doesn't necessarily have to have one. So there's a house. So there's a kind of a house here and some grass, and then there might be a garage here. And so what you're saying is, in order for it to be a laneway suite, there's got to be a laneway. But we can get around that as a garden suite, that somebody might approach it this way and then walk through the yard into that. Is that what you're saying?
That's a perfect description. You did a great job drawing that there, Rav.
Thank you. So Andy, is there more cost involved when it's a laneway suite, or it's the exact same process depending on the municipality in which you do it in?
Yeah, really the process is of a laneway suite and a garden suite are exactly the same from a financing perspective and investments perspective. It's all the same, but every city is going to have their specific bylaws and rules on exactly how it's going to look like, the size, the height, number of bedrooms, etc.
Okay. Andy owns this property. He's fit. He likes to walk. It's in the downtown Toronto. So Andy, his wife, they don't have a car. And so this is would be used typically as a garage. And along comes Rav, and Rav says, to Andy, Andy, if you're not using the garage, can I purchase this from you? Is that such a thing? Like, can I take title to this, Andy, or how would this work if Rav wanted to use this as an investment opportunity?
Great question. And as it currently stands, the municipalities have specifically stated that it cannot be severed off from the main property. So you are essentially able to add these garden suites. It could be a converted garage, it could be a brand new build, but it's going to be a single title with that main house that Andy owns in that image there. Okay, so then if Andy doesn't want to have anything to do with this, but Rav does, now this is a relationship that Rav and Andy have to work out, because I cannot, Rav, as the investor, be on title, cannot sever, so on and so forth. Yes? Not currently. Yeah, there are other jurisdictions outside of Ontario where they have allowed severance and multiple titles, but currently not yet in Ontario.
Okay. And what would something like this go for? I mean, obviously it depends if you're doing from ground up, if you're building within an existing garage. Can we build on top of? If there's an existing garage in Toronto, can I build on top of that?
Yeah, so the bylaws in Toronto are a little bit more, are a little less stringent than some of the other municipalities outside of Toronto, just because of the density of Toronto. So for example, in a lot of the laneway houses that have been built, a lot of them have been built on top of existing garages, even a portion of the garage, if it's structurally sound. Now, in many cases, you have an old dilapidated garage, it's leaning to one side and it just doesn't make sense to try to salvage it. That garage would get torn down. And they have made single story, second story, and even basements in some of these laneway houses.
And so again, this Andy's dwelling, we're kind of East York. Maybe it's what, 700,000-800,000? Is that fair? Can I say that?
I don't know. I think that's probably unlikely given what's, what we're seeing. I mean, so I'd probably be closer to $1 million.
Okay, so let's say the house is $1 million, and then relatively speaking, this would be what? What percentage of this? 25%, 30%, 40%? How much would if Rav was to get involved? Let's pretend we could sever. Let's pretend I could go on title. What would I pay for this? Not finished, just for the rights to be able to do something.
Right. Okay. So assuming you had a property that maybe had an old garage or at least the land available in the back, and it's going to be $1 million.
Yeah.
The cost to build something like that, it's going to vary tremendously depending on the type of build, the size of it, what the costs are, right? But you could be looking anywhere between $200,000 to $400,000 to build, a 2-bedroom or a 3-bedroom garden suite laneway house.
Yeah. Yeah, no, it's going to be dependent on per square foot. I'm just saying, prior to building, what would I offer to Andy?
Right.
Prior to building, for Andy to give this to me, because Andy doesn't use it anyways. Would I be offering $200,000 for it? $100,000, $300,000? What would you in this kind of scenario?
Right. So if I understand correctly, are you saying it's got to be some sort of a joint venture? Because again, you cannot just sell somebody a portion of your land in that situation to build a laneway house. It has to be part of the same title, right?
Yeah.
So
yeah.
If you were to say,
I mean, whether it's a separate title, which we can't, or we do a joint venture agreement, or whatever the case is. But let's just pretend we can do separate title. Am I paying a couple $100,000? Am I paying $100,000? Is Andy happy with that? Like, he's not using it anyways. I still have to do the construction and so on and so forth.
Yeah. So to be frank, I haven't analyzed those numbers in that particular scenario. The way that I've analyzed the numbers is, if I were to buy a single family home, some of the markets I'm looking at really aren't necessarily Toronto, because from an investment perspective, they may not necessarily make sense because of that high capital requirement on the $1 million home. But the way we've looked at it is looking at a property that is anywhere between $400,000 to $600,000, the cost to add in a second basement suite, and then also to build this garden suite, what we'd be looking at. But as a percentage of the entire property, maybe it's going to be, if I had to take a guess, it could be anywhere between 20 to 40% of the value of the entire property, if I had to just sort of take a ballpark.
Okay. So let's use 30%. So Andy, and what kind of areas would you be looking at?
Okay, so I'm looking right now at cities where the policies have already been implemented. So we know that this policy got passed by the provincial government in 2019, but it's always going to take several years for all the cities and towns to catch up to what the province has mandated. So right now I'm looking at the cities where they already have rules in place. So just to kind of name a few off the top of my head: Barrie, Hamilton, Kitchener, Brantford, and even as far as away places like London and Windsor, Welland, Ontario. Those are just a few right off the top of my head, but there are a number of cities that are working on them right now. Toronto is working on one right now, and they've learned a lot from their laneway house policy. So that should get implemented sometime in 2022.
Yeah.
And so we're going to start seeing, them in most municipalities in the coming years.
You're not just a handsome face, huh, Andy? Smart guy. No, I really love this. I mean, so for example, in Barrie, we might buy something for $400,000 or $500,000. Rav comes along, he might pay 30% for this, $150,000. Maybe I'm going to build 1,000 square feet at $200 a square foot. So that's another 200,000. So, so let's say 200 grand here. So I'm in for 350K, and I might be able to rent that out for 2,000 a month, or something like that. So no, this is ingenious. Love what you're doing. Want to learn more about suite additions and how that came to fruition. And then we'll look at the numbers. We'll do a case study and kind of break down some numbers of a live deal that you're actually in the middle of. We're talking to my friend Andy. We're learning how we can make money with a garden suite. Don't go anywhere. We'll be right back.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
At Theta Training, our goal is to help you achieve financial freedom by teaching you the foundations of trading stock options. Join our growing community. Learn through our live-streamed weekend course, or develop your skills at your own pace online. Understand how the stock market works and how you can use the options market to earn additional income. Achieve financial freedom and live life on your terms. Let us help you build your empire.
Hey, it's Rav. Welcome back to Everyday Investor. Super exciting show. We're talking about garden suites. Never done that in the 17 years of being on TV. But before we get back to Andy, let's find out what's happening in the world of mortgages with Kyle Ford. Over to you, Kyle.
Thanks, Rav. This week I want to talk about mortgage maturity dates. This is something that we've talked about in the past, but something that I continue to see as a primary focus for people in making a decision around their mortgage. Yes, by waiting till the end of the term of your mortgage, that is the optimum time to change in terms of fees, a penalty, and legal costs. However, many Canadians are in a mortgage product that might not be adequate to their current financial position, as well as their other debts, long and short-term goals. A mortgage review is something that should be done on an annual basis, and sometimes that means breaking a mortgage early to change the structure of your debt and put you in the optimum position going forward. These reviews are no obligation, and myself and the team are here to help. Thanks. Back to you, Rav.
Thanks, Kyle. Always great to learn from you. Andy, it's always great to learn from you as well. Thanks for being on the show.
Absolutely.
Yes, and so suite additions, that is, Andy, if Rav wanted to do what you just taught us, in terms of a basement apartment or a garden suite, then you can help me, you and your team with permits, zoning, legalities, all that kind of stuff, correct?
That's correct. Yeah. So we help you with the whole design process, help you work through all the little, bylaw and building code requirements to get it into a legal unit.
Perfect. And then let's say, there's enough money on the table here, and I know there is. We'll take a look at some numbers. Do you also, because I know you help other people do it, but you also do it obviously on your own, as is the case that we're going to look at. Can Rav, the viewers, get involved in that as well? Can we form a joint venture partnership, meaning, perhaps I go on title or I put up the funds, Andy and his team do all the work, and then we kind of split the profits? Do you also do that as well?
Yeah, absolutely. So, as you mentioned, primarily our services is to help homeowners and investors through that process, through that design process. But we also use strategies for JVs where, I'll bring in a partner and I will work through the entire design and renovation. And then basically all they're doing is, looking at their portfolio and seeing where the profits are. So we have 2 projects right now that just started in Brantford.
So let's take a look, run us through the numbers on this. This particular one is in Brantford, home of the great one, Mr. Gretzky. And you, Andy, where do you live? Where do you reside?
I live in Toronto, in the East End, Scarborough.
So we don't have to do this in our own backyard. I mean, you live in Toronto and you're doing this in Brantford. I guess you go wherever the numbers make sense.
Yeah, as long as it's not more than a 2-hour drive, I think that's as far as I'll go. But, there's going to be deals in a lot of different places.
Yeah, no, fantastic. Okay, so on this particular property, what was the purchase price on this?
So this purchase price was a little bit higher. And the reason is because a lot of the existing house is actually, a lot of renovations were done. So the purchase price was $620,000.
$620,000. And so on this one, we're doing both a basement suite as well as a garden suite?
Correct. Yeah.
We're doing both. And so, and this was was this a bungalow, 2-story? What was it?
Yeah, so it was a bungalow, a wartime bungalow in your very typical low-rise single-family neighborhood.
And you're saying you paid a bit of a, I don't want to say premium, but you paid a fair price for it because the main floor of the bungalow was already done.
Yeah, the main floor was done. As a matter of fact, the basement's already very well finished, and we really just have to spend some money to legalize it and also to put in a kitchen to make it actually a suite in the basement.
Okay, well, here we are in the early summer of 2021. As an investor in Ontario, for now, we need to put 20% down. Is that what you did? You put 20% down on this property?
Yes.
So 20% down payment on this equals what?
That works out to $124,000.
So 124K, and then closing costs?
Closing is about $10,000.
Is about $10,000, and then you did the basement as well as the garden suite. So for these renovations, what did we spend on the basement?
So the basement is only going to be $30,000, and because we did pay a premium for this property, other investors may, put in $450, $500 for a similar property and then do a brand new basement suite. But in our case, it's lower for $30,000 for the basement suite.
Okay, because you're saying basically everything was almost in place. You might have to update a kitchen or figure out the fire code for the separating the units or whatever the case is. But you were able to do that for $30,000, and then the garden suite.
The garden suite, we have that estimated at $200,000. So we're going to start construction on that very soon.
$200,000. Okay. So if we add up these numbers, what does that give me?
Total investment of $364,000.
$364,000. Okay, so whether Andy's doing this by himself, whether he's partnering with Rav and Rav's the money guy, I can either go to my piggy bank and find $364,000, or I can use, and most people probably would, a line of credit, where I'm just paying kind of the interest on it per se. But for now, let's look at what the return on investment would be if we actually put in the $364,000. So we're making money. Obviously, there's some cash flow on this. There's a mortgage that's being paid down, and that's being paid down, Andy, by now three tenants, right? I have my person living on the upper floor of the bungalow, the lower floor of the bungalow, and then the garden suite. So I have 3 tenants.
That's correct. Yeah, and they're all paying their own utilities as well.
And they're all paying their own utilities. Okay, great. So after all my expenses, insurance, taxes, mortgage, and then the rent that comes in, what's the difference? How much am I making in cash flow on year 1 in this property?
So we're estimating the monthly cash flow to be $1,500. So in a year, that's $18,000.
$18K. Okay, and then the mortgage pay down?
The mortgage paydown would be roughly $11,000 per year.
$11,000. Okay, and then of course there's a natural appreciation on this property. Now, when you were done all this property is not $620,000 anymore. I mean, I put in over $360, so I'm imagining this property is worth over $900,000. I mean, what is it appraised at?
Yeah, so based on comparables right now, it's not going to appraise higher than the amount of money plus the original purchase cost that we put in.
Okay.
But we feel that a year after that, it should go up by 5%, just based on market appreciation, and then another 5% on forced appreciation. So immediately after rentals, we have that estimated at $950,000.
950 is estimation. I mean, your break even 984, but whatever. Let's use 950. But you're saying we're going to use a appreciation amount on the 950. So what do you like to use for a natural appreciation in the Brantford area?
Yeah, so I'm going to be super conservative because, I just want to make sure that even in an event where, we don't get the crazy appreciation that we've gotten in the past several years, even at 5% appreciation, we're going to do well.
Okay.
But what we also like to add is the 10% appreciation for increasing the intrinsic value of the property. So what I like to do is I'll take 10% of 950 after the first year.
After the first year, but in the first year, you're going to use 5%.
That's correct, 5%.
Okay, so that's what, 40, 45, 47,000?
That's right.
So 47K for that. And then those are our three numbers. Of course, we created something here. We created a basement apartment. We created a garden suite, but we're making money on these three numbers. So when I add up 18, 11, and 47, what does that give me? 30, 76?
76.
$76,000. Okay, that's not bad. So I'm making $76,000, and I'm in for 364. Again, most people wouldn't put in 364 cash. They would, take that from a line of credit or whatever the case is. But let's just pretend we did. 76,000 divided by, so our profit divided by our investment amount, 364 is what?
Yeah, so that's just over 20% annually.
Okay, so my ROI equals 20% on an annual basis. I mean, that's a very healthy return. And of course, this is just year one because we've created two new homes, if you will, right? We created a basement suite, a garden suite. And so these are the kinds of things. And then of course, after this, it just gets better, right? It's going to continue to increase in value, mortgage pay down, cash flow increases. And then you could even refinance. Is that the plan? Like, let's say Rav was in this deal with you in a year, 2 years, 4 years. We refinance and try to pull out as much money as possible so long as the numbers still work?
Yeah, it really works when you kind of think of it from a long-term basis because, you're going to be getting that cash flow, of course, that's going to cover everything. The value is going to keep increasing, and any sort of additional profits that you make beyond what you had to pay down for, say, a home equity line of credit, that will pay down itself in probably in about 10 years' time. But the idea is that after that period of time, this is just going to be a cash generating asset, right?
Yeah.
And, even if you decide to sell it after a few years, you will have made some money back for that. So it makes a lot of sense financially. And obviously it makes sense because you're adding additional housing units to, the community.
Yeah, no, love it. And, with this 364 that, we're in for, do most of your joint venture partners, are they borrowing that, like I said, from a credit line or whatever the case is?
Yeah, great question. Most of them are borrowing from their home equity line of credit. However, we do have some investors with very good income, say from their job, and they've already invested in some real estate, and they're getting close to maxing out in terms of what they can borrow. But we have spoken to some lenders, not your typical, big five banks, but there are some alternate lenders that are looking into this and seeing the benefits, obviously, with the potential rent that can come in. And that's an option for folks as well, is to get construction financing for some of these garden suites, potentially in the coming years. And that really, allows them to not have to over leverage on their home equity, or if they've already maxed out on that.
Yeah, but I mean, Andy, already, if this is cash, I'm already making, the 20%. I can't imagine if, we could leverage that even more. I mean, these are really healthy returns. And as you've always said, I think more offline, as long as you're building a quality product, that's the key. Andy, thank you so much for being on the show. Again, you help people, Sweet Additions, you help people with design, permits, all the legalities, but you also invite people into your deals as money partners, and then you kind of split the profits. Thank you again for being on the show with me.
Yeah, thank you so much for having me, Rev.
And thank you guys for watching at home. Without you, we would not have a show. Make sure you tune in next week, same place, same time. Honey, I love you. I'll be home soon. Thanks for watching, everyone.